What is the role of an auditor in a private corporation? The role of an auditor in a private corporation, particularly within a small or medium-sized business enterprise, is to provide an independent and objective evaluation of the company's financial health. Unlike internal accountants who manage daily transactions, the auditor acts as an external examiner who verifies that the financial statements accurately reflect the true economic position of the entity. This process involves a systematic review of the corporation's books, records, and supporting documentation to ensure that no material misstatements exist. For a private company, this level of scrutiny is essential for building trust with stakeholders who are not involved in the day-to-day management of the business. By offering a professional opinion on the fairness of the financial reports, the auditor provides a foundation of credibility that is vital for the company's ongoing operations. Ultimately, the auditor serves as a critical link between the management team and the parties who rely on the integrity of the corporate financial data. One of the primary functions of an auditor is the assessment and testing of internal controls within the business enterprise. In many small or medium-sized companies, the limited number of staff can lead to a lack of segregation of duties, which increases the risk of error or intentional fraud. The auditor examines the policies and procedures the corporation has in place to safeguard its assets and ensure accurate reporting. By identifying weaknesses in these internal systems, the auditor can provide valuable recommendations to management on how to strengthen their operational framework. This proactive approach not only helps in preventing financial discrepancies, but also improves the overall efficiency of the business's administrative functions. Therefore, the audit process is as much about risk mitigation and process improvement as it is about historical financial verification. For small or medium-sized business enterprises, the role of an auditor is often a prerequisite for obtaining financing or attracting outside investment. Banks and other lending institutions typically require audited financial statements before they will approve significant business loans or lines of credit. These lenders need independent assurance that the corporation has the financial capacity to meet its debt obligations and that the collateral values are stated correctly. Similarly, if a private company seeks to bring in new shareholders or venture capital, those investors will demand a thorough audit to validate the valuation of the enterprise. The presence of an auditor's report significantly reduces the perceived risk for these external parties, making it easier for the company to access the capital necessary for growth. Consequently, the auditor plays a pivotal role in the financial scaling and long-term sustainability of the private corporation. In addition to financial verification, the auditor ensures that the corporation is in compliance with relevant accounting standards and statutory regulations. Private companies in many jurisdictions must adhere to specific frameworks, such as the accounting standards for private enterprises, the International Financial Reporting Standards, or generally accepted accounting principles. The auditor possesses the technical expertise to determine if the company's accounting policies are consistent with these mandatory guidelines. They also monitor compliance with tax laws and other government regulations that could result in significant penalties if ignored. By keeping the corporation aligned with these legal requirements, the auditor protects the directors and officers from potential litigation and regulatory scrutiny. This oversight is particularly important for medium-sized enterprises that are navigating increasingly complex reporting environments as they expand. The auditor also provides a level of protection for the shareholders, especially in private corporations where the owners are not the managers. In many family-owned or closely held businesses, certain individuals may run the company while others merely hold an equity stake. The auditor acts as a neutral third party who ensures that the management team is not misrepresenting the profits or concealing losses from the owners. This transparency is essential for maintaining harmony among shareholders and ensuring that dividends are distributed based on accurate financial performance. If the auditor discovers evidence of financial mismanagement or the misappropriation of funds, they have a professional duty to report these findings. Thus, the auditor functions as a guardian of shareholder interests, promoting accountability and transparency within the corporate structure. Finally, the auditor often serves as a strategic advisor who provides insights derived from the deep dive into the company's financial data. While the primary goal is the audit opinion, the process frequently reveals trends in revenue, expenditure, and cash flow that management might have overlooked. An experienced auditor can compare the corporation's performance against industry benchmarks and offer suggestions for cost-cutting or revenue optimization. This consultative aspect of the role is highly valued by small and medium-sized business owners who may not have the resources for a full-time chief financial officer. By translating complex financial data into actionable business intelligence, the auditor helps the corporation make more informed decisions for the future. The relationship between a private corporation and its auditor is therefore a multifaceted partnership that goes well beyond a simple compliance exercise. To learn more about our law firm's corporate business legal practice, we welcome you to visit our website and contact our law firm to schedule an initial consultation. Thank you.